Good day, and welcome to the SNN.Network Summer Virtual Event. Our next presenting company is Bitfarms. It is now my pleasure to turn the floor over to Jeffrey Morphy, President of Bitfarms. Sir, the floor is yours.
Good afternoon, and thank you. Yes, my name is Jeff Morphy. I'm President of Bitfarms, and I'm being ably assisted today by Darcy Donnell, Vice President of Corporate Development, who will be running the slides and helping with some of the Q&A session later on. What we're going to do over the next half hour, we're going to try to run through an overview of the company for about 20 minutes, leaving some time for some questions and answers once we're done. But before I get going, just to make sure the lawyers stay happy, prior to proceeding with Bitfarms in our presentation today, I would like to remind you that certain statements that will be made during the presentation may constitute forward-looking information and that actual results could differ materially from any forward-looking statements. As well, the company undertakes no obligation to revise or update any forward-looking information other than that is required by law. During this presentation, the company will refer to certain measures not recognized under IFRS and that do not have a standardized meaning prescribed by IFRS and therefore may not be comparable to similar measures presented by other companies. The company uses the following non-IFR measures: gross mining margin, gross mining profit, adjusted EBITDA margin, EBITDA, and EBITDA margin as additional information to complement IFRS measures to provide further understanding of the company's results of operations from management's perspective. We invite participants to refer to the company's Q2 2021 Management Discussion Analysis for definitions of the aforementioned non-IFR measures and their reconciliation to IFRS measures. Please note that all financial references are denominated in U.S. dollars unless otherwise noted. So now let's get into some fun stuff here. Bitfarms was started back in 2015 by a couple of entrepreneurs who are still with the company. One is the CEO and one is the vice chairman, executive chairman. And they started out in their garage in Buenos Aires in Argentina and figured out that there really was a business associated with crypto mining. And at that point, they were mining about 4 different currencies and really experimenting with things, and they thought this was great. They banded up with some family and friends and then with a couple of other entrepreneurial spirits, which took them to the province of Quebec in Canada, where there's a lot of electricity, hydroelectricity, and at good prices, and that was the genesis of the company. And it formally commenced in 2017, and we are a Bitcoin mining company. We only mine Bitcoin, and we have 5 high-power production facilities in the province of Quebec, south of Montreal, where we have our focus on our business right now. But an investment in Bitfarms will get you exposure to Bitcoin and a very efficient mining operation, which we will describe. What makes us quite a bit different from others is that from the early going, which was years ago, which is a long time in this industry, we've been a self-miner. And that's led us to building our own facilities and putting in our own miners. And through that experience, it's brought a lot of definite benefits, and having scale is very beneficial. So we have now 69 megawatts that we draw on in the province of Quebec for our 5 facilities, and we plan to expand quite rapidly from there. So we plan over the next approximately 6 months to expand from 69 megawatts to 119 megawatts in the province of Quebec. And our contracts allow us to expand up to 160 megawatts in the province, so we can still expand from there, and we can do that from our existing contracts. We have approximately 23,000 miners, ASIC miners, that are in action right now, mining away. And that represents approximately a 1.4% global market share right now, which is a pretty significant position, even though 1.4% doesn't sound like a lot. The location up in Quebec is one that really is ideal because of the Canadian climate. We get the cooler air, so we're able to use fans to cool our miners. And that's you need to keep your miners cool for them to operate optimally, but we don't have to do immersion cooling technologies, which means higher capital cost. And that means that we can be very efficient. We basically use 96% of all energy to our mining operation. The 4% is parasitic. What's nice is that we're also quite vertically integrated. About 2 years ago, we bought an electrical services firm right in the heart of where our mining facilities are in Bromont, Quebec, called Volta. We have about 50 people working for Volta, 34 of which are licensed electricians. So instead of having to go out and finding an electrician every time we need to do a modification or when we do a major renovation or even set up a new facility, we have our own staff that's experienced and able to come and do the work for us. The other thing that is a nice thing having scale is the fact that we have our own repair lab. So when miners go down, and they will go down, especially when you have 23,000 of them, it's wonderful when you can fix them yourselves. And we have the repair lab, we have technicians there, and we're able to fix the power supply units and the circuit boards and things like that. So we're able to put them back into action right away. And miners are expensive, so having them out of action is a cost. So getting them back in is important. And many other companies need to send them to the United States or to China. Sometimes they're out of action for weeks, sometimes for months. So that's a decided advantage that we have. The other thing is differentiates us is that we really do have a strong foundation. We have been public for 3-4 years now. We actually started on the Tel Aviv Stock Exchange, and then it really didn't have a lot of advantages. So they migrated to the TSX-V, and we went on to the Toronto TSX-V, the Toronto Stock Exchange Venture Exchange, using a full prospectus. We're not aware of any other publicly traded crypto mining companies that have come in through the front door of a stock exchange. Most have come through a reverse takeover. So we came through the full prospectus approach. And the other thing that really differentiates us is that we are the only one that we are aware of, publicly traded mining company, that's audited by one of the big 4 audit firms. If you look at the other publicly traded mining firms, they will have accounting names, auditors' names that you may not be familiar with. We think being associated with one of the big 4 firms, well, it costs more money and takes a considerable amount more work, helps to bring credibility to our company. The other thing that we can add is that on June 21st, after considerable action, our application was approved and we started trading on Nasdaq. So our symbol BITF is the same on the Toronto Stock Exchange Venture and on Nasdaq. I think we can move on to the next slide now, Darcy. What we have is a very seasoned management team. Like up in the top corner of the slide, you can see Emmy and Nico, who are our 2 founders, and then complemented by a professional team with all professionals, all with different skill sets. Like, for example, I came from a financial background. Jeff Lucas is a very experienced CFO, having been CFO on NASDAQ and New York Stock Exchange companies. Ben Gagnon is our head of mining. He's our chief mining officer. He has set up mining operations in the United States, in Canada, and in mainland China. He speaks Mandarin fluently. He's a real asset to us, and he's been doing this for longer than most people in his business. Benoit Gobil, he was the founder of Volta Electric. He's a master electrician. He's got all the credentials and knows electricity like the back of his hand. Nathaniel Port was top of his class in accounting. Darcy Donnell, who's helping me today, joined us in April and is a very seasoned accountant and CFA, considerable capital markets activity and research. Anyways, we're lucky to have a strong team, and everybody complements each other. Our board, we have the 2 founders up top, and then we have 3 very seasoned independents for governance who keep us on track. Pierre Securities, he was the managing partner of the PwC office in Montreal, very, very high regarded in Canada. Brian Howlett, CEO of a mining company. This is a resource-based mining company, CEO of a number of companies over the years. He's very successful. And Andreas Finkelstein, United States resident, worked for the Soros brothers, capital markets. Once again, everybody complements each other, and they provide tremendous mentoring for us. I mentioned that we were heading on a growth trajectory, And it's quite an ambitious one. Like, we are already one of the largest Bitcoin mining companies in the world, both in private terms and in public terms. We mined more Bitcoin than any other public company last year. And really, I think for the first 6 months of this year as well, we mined more Bitcoin than any other publicly traded company in North America this year. And we're still growing, and we just have competitors that are growing fast too. But we finished off the year last year at 965 petahash, which is just under the 1 exahash level. And in this business, you're not competing in the industry or generating revenues unless you have a high level of hash rate. That's the number of calculations per second that you are putting into the system trying to solve block rewards. And every 10 minutes a block reward is solved. That's equal to 6.25 Bitcoin. If you don't have hash rate, then you're not in there. And as I mentioned earlier, we have about 1.4% market share of the world, and that's based on 1.42 exahash now. So we've grown from 965 petahash at the end of last year to 1.4 exahash, sort of where we are here in August. We plan to be 2.5 exahash later on this year, 3 exahash by the first part of next year, and our corporate goal is to hit 8 exahash by the end of next year. So from one year to the next, we're growing by a factor of 3. Over the 2 years, we're growing by a factor of 8. And as this slide is showing, like, that will involve building out our existing facilities even further in Quebec. We have a wonderful power purchase agreement in Argentina that we signed a few months ago. I think it was just the beginning of April. It's for 210 megawatts of electricity at 2.2 cents US per kilowatt hour. In Quebec, we're at 4 cents per kilowatt hour. So it's 45% less in Argentina. And that will bring down our average cost as a result of that. In this business, electricity is really your biggest input. It's about 80 to 85% of the direct cost of mining a Bitcoin. So having robust power agreements at good prices is absolutely key. So Argentina is where we're expanding. Quebec, as I mentioned, we have a substantial expansion plan happening there as well. And we're exploring other locations in South America, Europe, and Canada as well. So we aren't finished expanding after this year and next. We are endeavoring to find new locations. And may I add, like, we were one of the greenest miners around because everything in Quebec is 99+% hydroelectric power. And while Argentina is fueled by natural gas electricity, which is why we can get the good rate, thereafter what we're looking at is other renewable sources of electricity to power ourselves going forward, because I think that's, in the long term, that's going to be very important. We have over 56,000 miners on order right now to come in to fuel that growth, which includes 48,000 micro-BT miners that will start arriving in January and then be delivered on a monthly basis until the end of next year. There is some additional capacity probably coming online second half of next year, so we'll have to buy some more miners to really fill in the infrastructure to do that. But we've done a lot of the heavy lifting already. Now it's time to execute, and that's underway. As I mentioned, we got a staff that's very knowledgeable in mining. I think if you look at us versus many of our competitors, you'll see a considerable amount of operational experience. One of the things that sets us apart is this self-mining. A lot of the other miners bought the miners and then plugged them in at third parties in hosting arrangements, as they're called. And if you do that, then you're having to split the pie up. Somebody else is making money. We like to do it ourselves because we can control the variables, and we have the right people to do that. I mentioned earlier that we got on the Nasdaq in June, and that really is opening up the world to both investors coming into our company and access to capital. This is a capital-intensive business, and to be successful, you need good access to capital, and we plan to fund that growth through debt facilities on equipment and by raising more equity. And we plan to be prudent in that approach, but at this level of growth, we will need to raise additional equity to do that. Earlier on, I mentioned that we have 69 megawatts that we're drawing in the province of Quebec right now. This chart shows you where we're doing it at the 5 locations, and then it shows what we plan to grow to this year and next. So you'll see new locations in Quebec, and certainly the big tall one is our 210 megawatts in South America. We also have a little bit of hosting in the United States. But yes, we are going to grow from the 69 megawatts to 119 megawatts and then 382 megawatts later on next year. The other thing that sets us apart is that we continue to invest in new miners. The newer miners are just that much quicker, and they're that much more efficient. The architecture that they're coming with these nanometer structures is incredible. So the newer miners are able to do more hashes per second using less electricity. So when you're in this business, getting modern miners will allow you to increase your hash rate while keeping your primary costs down. There's an example of another miner when they went through 1 exahash of performance earlier this year. They bragged that they were able to do it with 105 megawatts of power. We did the same thing using 69, and that's because our fleet of miners is newer and more efficient, and that's why the other company is in a substantial rebuild program right now. I mentioned our size, and this slide goes to show you against the 2 big American companies that are in the Bitcoin mining business. One's called Riot and one's Marathon Digital Holdings. And like you can see how on a year-to-date basis, Bitfarms has mined 1,748 Bitcoin. Riot was less at 1,610, and Marathon, it's even bigger. They only had only. That's not very nice. They generated 1,288 Bitcoin. That's a lot of Bitcoin, but it's still less than us. But what's really interesting is when you drop down below that, what is the difference in market caps for these companies? Like Riot's up at 3.2 billion. Marathon is up at 3.2 billion. Yet Bitfarms, even though we're mining more Bitcoin, is just a fraction over $1 billion. So that goes to suggest that our valuation is, well, we are less, but it suggests that we are significantly undervalued. And that's because we haven't done very much marketing. We're really turning that up this year, but in previous years, we were just a small regional player. We kept to ourselves, and it was good enough. It's not good enough anymore, and we've really turned it up. The next 2 slides goes to that point on valuation. So both of these slides, this one and the next one, talk about relative value. And so this shows market cap to hash rate, and you need hash rate to be big and to produce. So when you look at the green bars, you can see how much higher Riot and Marathon is to us. Once again, we think on a relative value basis, we are undervalued and that we have a long way to catch up. This one also shows 2 of our other peers, Hive and Hut 8, similar type of valuations. On the same basis, they should go up too. The next slide, instead of hash rate, it talks about enterprise value. So enterprise value to terahash, and same result. You see that Riot and Marathon are very highly valued, and the rest of us have some catching up to do. So we think that's a real opportunity for us and our investors. We just released our second quarter results on Monday. And certainly you can go to those to really see more information on the company. But you'll see how our revenues at first quarter, second quarter, successively higher. Gross mining margin, which is sort of the profitability of mining Bitcoin directly without corporate overheads, once again, quite high. Adjusted EBITDA is EBITDA, but does not take into account the accounting treatments, the non-cash items related to share issuances and treatment like that. And in the first quarter, our adjusted EBITDA was $19.8 million. This recent quarter is closer to 24 million. So very strong performance. That works out to 65% adjusted EBITDA margin. Very strong. Very few other companies can even come close to that. Gross mining margin, for the sake of time, Darcy, I think I've already talked about the favorable gross mining margin. From a balance sheet perspective, we've used the private placements that we did earlier this year to really clean up our balance sheet. So we have good liquidity, 36 million of cash. Digital assets refers to the number of Bitcoin that we have on our balance sheet. And that's particularly important because earlier this year we changed our strategy. Before that, we sold every Bitcoin that we earned to pay for growth, pay our bills, that type of thing. When we started doing the private placements, we started using equity to cover our OPEX because we think Bitcoin is an appreciating asset class. So when we can mine it at $9,000 per Bitcoin, put it on our balance sheet, and Bitcoin prices are 45,000, and what we think is going up, we think by being able to put them on our balance sheet, it allows investors to invest in us for not only the margin performance, but also the fact that we turn around and embed that margin performance into our balance sheet, into an asset class we think is appreciating. So like if Bitcoin goes from 45 to 90, then like that line just goes and doubles. And 45 million, this was at June 30th when Bitcoin price was around $30,000. Today with the number of Bitcoin that we put on our balance sheet and more like 45,000, that number is now $81 million. And it shows how quickly our balance sheet can grow when Bitcoin price goes up. The rest of the balance sheet shows that we've got our debt very much under control. We've got some equipment financing and we've got a lot of equity. So we've got a very good balance sheet. Just to basically put it in wrap-up mode now, I'd like to show you a few pictures of some of our facilities because I think anybody that's toured manufacturing facilities, you've been in messy ones, you've been in clean ones, you can really see the difference. But if you look at how well organized and clean our facilities are, you can see how much pride we have in putting these together and how clean they are. Every time we do a mining operation, we figure out how to do it better. So we go and put each iteration, making each improvement into our newest facility. So we generally renovate every 2 or 3 years and bring the best practices forward. And what you're seeing here is a picture of each one of our facilities as it moves ahead. And robust wiring. And the other thing is that differentiates us, and I forgot this earlier, was that we have our own proprietary software system. So it goes and tells us the performance of every miner quite literally every couple of minutes. And we're on a rebuild of that system, but we will know what every miner is doing every second so that we can control heat, we can control repairs, we can control turning it on and off. We know the heat and the airflow. All of these variables are important to highly efficient operations. And it's another point of differentiation. This is the power plant in South America, in Argentina, that we have the contract with for 210 megawatts. The background field is where we were going to set up our operations, so we will be behind the fence, not attached to the grid, and have a direct tie with this plant. Voltas are the electrical service operation that I said, 37 electricians now, 50 staff, a big part of our operation. And when we don't need them, they're doing residential and commercial installation. So this is not only a great asset for us, but one that carries itself as well. And then we have the service lab that I mentioned earlier that repairs our miners when they go down. And then last, I mentioned that we want to be a proxy for Bitcoin. You can invest in us if you believe that Bitcoin is going to go up. We're just more of a bit of a leverage play. So here's a chart compared to our stock price and Bitcoin price to see our performance relative to the performance of Bitcoin. I think that's about it. If you want more information, certainly there's all the public filings on SEDAR.com, and certainly our website, Bitfarms.com, is another place to go. And I think I've left a little long, but there's probably a little time for a question or two if we can squeeze them in.
Thank you, Jeff. And on to the Q&A. The first question I believe you addressed, but I will ask it. What would you say are Bitfarms' competitive advantage as a digital currency miner?
Oh, our cost and our operations. Just because of our operating experience, and our self-mining operation, there's very few that can compete with that. We've got the scale. We buy miners at scale. We plug them in. We know how to set them up properly and get the most out of them. If they go down, we fix them. We have our own electricians. That is why we're one of the highest producers in the world.
Great. And as a second question, this is from Shelley Kraft. What potential development keeps you awake at night?
Right now, it's execution. You don't grow by 3 times in a year and a factor of 8 in 2 years without some sleepless nights and hoping that everything goes according to plan. And boy, is that being challenged right now because of COVID and the supply chain logistic issues. Just to buy a transformer nowadays is 12 to 16 weeks lead time before you can get your hands on it. Steel for new buildings is 3 to 6 months. So first, it's challenging enough to find good sites. But then when you do find new sites, you got to negotiate the power agreement. Then you have to order these things with such lead times. And it's a balancing act, and you need people to be working on everything. And also, we're going into Argentina. We're in Argentina, so we're having to set up staff there. Their wiring standards and such are different from North America. So there's some specialized expertise that we're having to bring in there. We're already running our company through 3 different languages, Spanish, English, and French. It's already an international operation, and I wouldn't be surprised if over the next 12 months we are in 4 countries. So we got a lot on the go. It is challenging, but it's fun. But yeah, there are some times that you wake up in the night and the head just gets going.
That's fantastic. So that does it for the questions.
Okay. Well, thank you, everybody, for your time. I appreciate you tuning in and listening to our story.
Ladies and gentlemen, that does conclude the Bitfarms presentation. Thank you for joining us. You may now disconnect.